let's take it forward, and we'll connect with with Matt Orton now. Of course, Matt's been walking our viewers through how we should expect the tariff wheel to move. So Matt, olive branch and an iron fist, then olive branch, then iron fist. What is coming next?
Hey, good morning. It's always great to join. And I think what we're going to continue to see is this back and forth. It's been happening since Liberation Day on April 2nd. And I think the market has digested that. At first, the market prepared itself for the worst. Very high tariffs across the rest of the world. And the rally that we had through the month of April, throughout May, has been quite spectacular. So I think what the market has realized is earnings, the base from which we're going to come, how the economy has been growing, all of that's in a very, very solid place. So the damage that tariffs are going to inflict, we can tell that it's not going to put the economy into recession. That's never been my base case, and I think the pivots that we've seen from the administration help to confirm that. But now that we've had this strong rally, and now that we don't really have the positive catalysts of earnings season coming, I suspect the market's going to be very driven by these marginal directional changes of the administration. And so I tell investors to be ready to use some of that downside if perhaps you weren't as aggressive towards the bottom of the market in April, because I think, again, the market is going to be able to see through all of this once we start to get increasing clarity.
Do you think markets are already capturing in a bit of an upside, and are markets already assuming that on the tariff front, it's not going to be as high as what was indicated, let's say in the month of March and April?
And the markets are baking in some of that. Obviously, the markets are not baking in the entirety of zero tariffs going forward. I think the market has digested a 10% baseline tariff across the entire world. And now the reactions are going to be very much with respect to who's getting more, who's having the trade deal signed, and where we might start to progress in the near future. When you look at just earnings, I think you can justify the move that we've had in the market, because absent tariffs, it's obviously counterfactual, but if we hadn't had tariffs put in place, we'd probably be at 7,000 plus on the S&P 500 after an earnings season that was almost double of what expectations were. We've got some big companies like NVIDIA reporting this week, which are probably still going to be strong. So I do think the markets have baked in some good news, but they're not overestimating that, which is why I do think dips are viable in the US market.
Matt, the good news here in India is that we've overtaken Japan to become the fourth largest economy in the world. But, talking about Japan, the fact that their core inflation is already at a 2-year high, it could perhaps force the BOJ to hike as well. What is it that you're making of the Japanese economy? Because there's been a lot of volatility in their bond markets.
Yeah, good morning, Aisha. And there has been, and when you look at really all of the major global bond markets, there's been a lot of volatility, and there's been a lot of steepening of yield curves, long-dated yields, not just in the US, but across all of the major economies and bond markets have been very, very elevated. So I think part of that is idiosyncratic. I think part of that is the large institutional buyers in this country just haven't been as aggressive. Japan in particular hasn't seen a lot of buying flow from pensions. If anything, there may have been a little bit of selling from some of the insurance companies that tend to be systematic buyers. But the Japanese economy is tied to trade. There's uncertainty with respect to where that direction is going to go, which is why any sort of trade deal that gets inked in the near future, I think, can be a very, very positive catalyst for that market. Because before we got into April and before you had the large reciprocal tariffs, Japanese earnings expectations were one of the only countries around the world where you actually had positive and accelerating earnings expectations from analysts. So if we can get back to a place where there's more certainty around trade, I think that'll benefit the Japanese economy overall. So it's a country to keep your eye on, but I wouldn't be wading into that too early.
Matt, so good having you on the show. Glad that you could take time out and speak with us today.
Thank you.
If you like this video, then like, share and subscribe to ET Now.